audible to all of yes. So let's wait for a couple of more minutes for because so many participants are joining. And in between that, if someone is interested to talk, so just raise a hand. So we will open unmute you for a couple of minutes, maximum 1 hour, not 2 minutes, till maximum 4:34 up to. No one is interested to talk, I think. Okay. So I think no one has raised hand. So I am assuming that no one is interested to talk. So let's begin the session. Good evening, all of you. Good afternoon, all of you once again, and one warm welcome to all of you. Today is 21st March, and market is showing some, jittery kind of condition in sideways kind of range. Mid cap, small caps are bleeding. So during this time, let's start today's Bazaar Pe Charcha. Myself, Pawan Jaiswal from Team TraderSmith. Disclaimer that I am going to read for you before starting this session. Registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all related documents carefully before investing. Then our company address, registration number with SEBI, compliance officer, and grievance officer, contact detail, email ID, and everything is given. Okay, so let's move on next slide to discuss about market. So as usual, let's start overall market condition that we capture as per only methodology of market direction. And you can see here on this PPT that majority of the market excluding pharma is in up and under pressure. Now, I am assuming that you all are aware about up and under market, different phases of market as per only methodology. And as per that, we categorize market in 4 categories. That is confirmed uptrend, that is rally, then uptrend under pressure, then correction, and then rally attempt. So majorly, if I talk about Nifty 50 and Sensex, both major index of the India is in under pressure. Under pressure is nothing but where suppose index has breached any particular key moving averages, like it has already breached 50 DMA. Even today it has retaken, but earlier it was breached 21 DMA as well as 50 DMA. And then distribution day was elevated, and that is why we have downgraded the market. Likewise, broader market indices like mid cap 100, small cap is also under pressure. Even in terms of percentage loss and everything, that is showing more underperformance compared to overall market. And major pressure is coming in market from this space only, that is small cap and mid cap. In reality, banking and financial is under pressure, which is major sector. Pharma is only showing rally kind of situation, that is showing confirmed uptrend. FMCG rally attempt, that means after correction it is showing some strength, but it is still showing some dicey kind of situation. And as per our methodology, that is only methodology of market direction, it is still falling under rally attempt. We are that means we are waiting for follow through day where this particular index will gain more than 1.7% along with higher volume compared to previous day. Then we will move it to rally. But currently it is in rally attempt one. Apart from that, other indices also like sectoral indices like energy, metal, auto are in up and under pressure. Means it is showing it is in some somehow pressurized manner. So let's move one chart to discuss. We will try to capture all the major indices here, and as well as then we will try to capture maximum number of queries as usual we do. So this is the Nifty 50 chart on MarketSmith India platform, as you see here. And if you are aware, let me do a annotation for you first. If you all are aware, we have mentioned this kind of, we are continuously alarming our subscribers or patrons that maybe market may face this kind of situation. And last time when we did this Bazaar Pe Charcha, at that time also I have drawn this trend line on this Nifty 50 chart, and we have raised the alarming kind of situation that the day it will breach this upward rising um, trend line or 50 DMA or 21 DMA, maybe market will start moving more volatile manner. And now it has breached 50 DMA. Yesterday and day before yesterday it has breached 50 DMA. But today there is some bounce back taking cues from this Fed policy. And Fed chairman has clearly indicated that we are still very much hopeful and optimistic that in January policy they will be moved toward rate cut, and they are expecting at least three rate cut. At least three rate cut means it may be more than that in this particular calendar year. And this market has taken positive sentiment from that. Dow has once again reached a new all-time high, and followed by our market as well. So there is a bounce back because of this. And if I talk about technical perspective, so I can say that here Nifty has has taken some sort of support around 50 DMA or 50-day exponential moving average. Because if you convert this simple moving average into exponential moving average, so it is exactly around that range only. So it has taken support around 50-day exponential moving average, I can say. And now after gap up opening, it remained traded in bullish zone only during today, at least majority time period. Now, what next actually from here? So one can expect like here, suppose it will remain traded above 50 DMA, then maybe it will be ready to move to our 22,200 or maybe 22,500 also. So most probably currently after not only this price pattern and everything, after doing a lot of sentiment analysis, economical and all after considering all the points related to market, with be it fundamental or technical or anything that, and that we are moving into this end of this calendar year also, sorry, financial year also, 31st March. And next week will be the truncated week. So only 4 or 5 trading session is hardly 4 trading session only is left in this calendar, this financial year. That is Friday, then Monday once again holiday, Tuesday, Wednesday, Thursday, and next Friday is also holiday because of Good Friday. So only 4 trading sessions to go. So I'm not expecting any major thing. So that is why I'm expecting most probably this Nifty 50 in this week as well as in next week or next couple of weeks perspective. Most probably it will remain traded in sideways only. And the currently range is in the range of approximately 21,700 in downside, and approximately 21,200, 250 or maybe 300 maximum range in upside. And in my opinion, most probably it will remain traded in sideways only in that particular range. I'm not expecting that Nifty will once again regain majorly from here and may give fresh pivot breakout and enter into uncharted trajectory. Overall placement is that much good, but at least this opinion is based on current available data. But if suppose scenario will change, so obviously we will change our opinion. But yes, one thing is very clear: unless now, from now onward, unless and until it will remain traded above this approximately 21,900, bias will remain positive in the range of 21,900 to maybe 22,200, 22,300. But the day it will breach once again this 50 DMA, that is around placed around 21,900. So maybe it will remain traded lackluster and maybe volatility will increase further. One thing. Another thing is that volatility index India VIX that we are discussing from the last couple of months frequently, mainly because of that there is a lot of actions are happening. Now I think in my opinion it is also in bottoming out process after touching 17 and then falling to 13, 14. So maybe there one can expect more volatility in market in coming weeks, actually, not in next week. So maybe next to next week, or in the month of April and May. And then election is also now declared, even though all the exit poll and it's not exit poll, sorry, opinion polls are suggesting that the current government will remain in continuation. So let's hope as market is expecting. But one thing is very clear, that market may remain traded volatile and choppy in next couple of months, and that is why we were saying that we are suggesting to remain cautious in this type of choppy market. Because if you see stocks which are belongs to mid cap and small cap, there are a lot of stocks, a lot of pockets or sectors which are really bleeding in current market scenario. But at the same time, there are a lot of quality stocks, frontline stocks, which are really doing good. If I talk about ICICI Bank, it is looking quite attractive. If I talk about this Maruti is doing good. Then today only we have added one stock. Uh, SRF we have added, I think. So SRF is also looking quite attractive. So it is a not like a index kind of market. It is a stock specific market. So I see. We also don't know whether things will improve or deteriorate from here. But one thing is, one more point is very clear after considering a lot of factors, that uh, this is the stock picking kind of market. And even after picking stock also, it is very difficult to generate positive return in this kind of market. Because in theoretical language, if I categorize the market, so generally all the people in the market since decades have categorized market in three categories. That is, one is bull market, bear market, and pig market. And in my opinion, from the last 1.5 months, or I can say almost 2 months, our Indian market has entered into pig kind of market, or pig kind of trend. So that is, and whenever even if my personal opinion is also very clear after having almost 16-17 years of experience in the market, that whenever there is a pig kind of market segment or market sentiment, it is very difficult for all of us to generate positive return. So in such case, I have learned only one thing, that we have to be very cautious while taking any particular trade. We generally do not go aggressive. That's why you find very limited number of recommendations in our trading portfolio. So numbers I have already given levels. So just keep mind that below 50 DMA, maybe volatility will increase. Above 50 DMA, maybe it will remain traded with little bit of positive bias. Not that much, but maybe positive bias. So from here, 50 DMA, that is placed around 21,900, is a demarcating line. Okay. Now next, let me delete first annotation. Yes. So next index is, one second. Okay. So next is the next index is this major index, that is Nifty, Bank Nifty. And if you see the bank performance of the Bank Nifty, so last time in last Bazaar Pe Charcha and last to last Bazaar Pe Charcha, it was showing some sort of positivity. But once again, from the last couple of weeks, it has started showing some lackluster kind of thing, trades, and now it is underperforming once again in the market. Now, if you draw this trend line, then another trend line here also. Let me draw one more trend line from this level to this level. So all these trend lines are suggesting that then 50 DMA, 100 DMA. And another thing is that placement of DMAs, placement of 50 DMA, placement of 100 DMA, placement of 200 DMA. If you see, all the DMAs are flattening now. 50 DMA, then 100 DMA, then 200 DMA. Even though it is in rising mode, but from the last almost couple of months, it is now entered into flattening zone. So maybe I'm expecting some more consolidation in 50 DMA, and more choppy kind of trading days and trading weeks in coming weeks in this particular segment also, that is 50D, that is Bank Nifty. From here, major support is placed in the range of 45,000 plus minus 500. Yes, 44,000 to 500, 44,500 to 45,000 kind of range is a major support area in Bank Nifty. And if I talk about resistance, so approximately 47,500 plus minus 500 once again. is a strong resistance in Bank Nifty. So roughly, if I say area of trade zone, so I can say that's 44,000 to 47,000, or maybe 44,500 to 47,500 kind of range. So 2 to 3,000 points of kinds of ranges there on Bank Nifty, so which I convert that points in percentage. So that is 5 to 7% or 8% kind of range is there, and that is why I am expecting more volatility in Bank Nifty. So maybe most probably Nifty will remain traded in sideways only in coming weeks and in volatile manner. And the levels that I have suggested is a major support is downline. Unless and until it will not breach that level, either side, that is 47,500 in upside and 44,500 or 45,000 kind of level downside, most probably it will remain traded in sideways and remain in underperformance kind of scenario. Remain traded in underperforming kind of scenario. Now, apart from this Bank Nifty, next is IT. So IT now has taken resistance to its previous all-time high level, which was happened in or made in I think October, November 2021. It has taken strong resistance, and after that started falling. It has reached 50 DMA. Now 50 slope of 50 DMA and 100 DMA, both 50 DMA and 21 DMA is deteriorating, and index is showing some negativity. Further, if I draw a trend line, so it has this trend line also here. It has breached this particular trend line from here to here, and it is standing below that. So maybe next support I can say this 100 DMA, which is placed in the range of 35,000. Then next support is around 34,500. So I can say next support in downside is placed around 35,000 to 34,500 range. Unless and until it will remain traded above that, maybe some positivity, hope for bounce back will be there. But suppose it will breach that level, so maybe more deterioration will be there in the trend. But it is very difficult to comment at current juncture that whether it will breach or not. So let's take downside support is placed in the range of 35,000 to 34,500. And if I talk about resistance and everything, so resistance is multiple strong resistance is placed in this particular range. And if I convert this particular range in a number, so that is placed around 37,500 to 38,000 kind of it. Now, my opinion is about this particular index is that most probably it will remain traded in sideways with little bit more negative bias. More negative bias means more than 50% bias. So 50-50 kind of situations are there, sideways kind of situations are there, but maybe going toward downside toward 100 DMA or toward 35,000, maybe probability of that moving toward 100 DMA or 35,000 to 34,500 is quite higher side compared to 50%. So maybe I can say if I convert this into number, so maybe downside going toward 35,000 to 34,500 is probability of that is maybe 60 to 70%, and likewise in upside maybe in the range of 20, 30 or 40% maximum. So that is why I'm expecting the sideways kind of range with little bit negative bias in the range of this 37,500 or kind of range in upside, and 34,500 or 35,000 kind of ranges downside in this major index, that is IT index. Now realty, after phenomenal move from almost 370, 380, or I can say 400, it has doubled in last year. It has generated triple-digit return. Index also and stocks, the majority of the stocks belongs to this sector, has generated positive return. And now it is showing some correction, decisive correction, I can say, after so many months. And now it has breached 50 DMA and hovering in the range of 50 in between 100 to 50 DMA. Now what next? So if I 1 second. Let me first delete this annotation. Then, so if I draw a support area and everything, so this is one support area which is placed around approximately 800, 810. 100 DMA is also placed in that range only, because if I find the value of 100 DMA, so 100 DMA is 790 and current range is around 710, 715. So I'm expecting this area of 790 is a critical support area because 100 DMA is there. but suppose it will breach that area, so maybe things will deteriorate further. But meanwhile, currently, yes, there is no sign that it will breach. One more observation, what I am finding in this particular index is this trend line. So if I, because major rally has started from this point, and if I draw a trend line, so trend line is also placed in on closing basis, trend line is also placed in the range of 780, 790. Or so, and 100 DMA is also placed in the range of 790 only. So that is why I'm expecting a strong support zone in the range of 780, 790. Unless and until it will remain holding above this range, I can say bullish, long-term bullish, and long to mid to long-term bullish trend is intact. But suppose it will breach, then once again it will be the matter of a fresh taking opinion that whether it will fall further from here. But suppose it will breach this particular range, so maybe next target would be 200 DMA. But it is very difficult to say that whether it will go toward 200 DMA or not. But currently, it may be possible that after touching 100 DMA or this trend line, same there will be some sharp bounce back also. But don't know what will happen in coming days or coming weeks. But yes, currently it is showing some sort of lackluster kind of trade, and major support is placed in the range of 780, 790 kind of. So I've discussed four sector, including Nifty 50, then Bank Nifty, then IT and Realty. Now my colleague Rahi is here. He will discuss few sectors. So Rahi, I'm
Yeah, thank you so much.
yes.
So please just stop sharing your screen. I would like to share mine. Okay. So I would be talking about Nifty Pharma, Nifty Auto, FMCG, and Energy. So this is the daily chart of Nifty Pharma. So Nifty Pharma is actually trading. There has been some profit booking at the higher level of this particular index, where the index has touched the high at 19,400 range, and then we have seen the profit booking has happened. But overall sentiment is not so negative here. We can say that it was like a short-term correction type of days in the past 1 week or 1 week to 1 week to 2 weeks, or especially from 11th March to, we can say, like 19th or 20th March. But one day is not there, so I would like to show here in the trading view. So index has actually reclaimed its 50 DMA. So this red line is the 50 DMA for this, and upside this blue line is 21 DMA. So index might that 21 DMA might act as a resistance, uh, and if that index is if the index reclaimed its 21 DMA, and if it is holding above that, then the Nifty Pharma index might retest its recent high, which was placed around 19,400 range. So far as its support is concerned about the index, the support is actually placed around 18,200 kind of level in this particular index. So this is about Nifty Pharma. Now Nifty Auto. So Nifty Auto also, after hitting the recent high, especially at 21,350 range, the index has actually witnessed some profit booking, and this profit booking has happened for almost 2 weeks, and after that it was actually trading in the flat zone, or we can say very tight range here. If you look at the chart, or I will show it here. So especially here. Um, Yeah. So in this range, and after that, we have seen that the index actually tried to move towards upside, and it has already in shown the resilience, and this short-term consolidation is actually surpassed by the index, and the index has also reclaimed its 21 DMA, but that is not so great, because it is just 10 or 15 points extra from its 21 DMA. But the main thing is, if this index is holding above that 21 DMA, and if it is maintaining that level, then again we can say like the index might retest its recent high, which was actually placed around 21,400 range. So as of now, we can see that there is no there is no long-term negativity in this Nifty auto. It is like short-term consolidation only, just for 1 or 2 weeks, and after that again the index has actually bounced back as well. So this is about Nifty auto. The third one is Nifty FMCG. So Nifty FMCG is actually, as Pawan has already in the beginning of this webinar, he has shown that the Nifty FMCG was in the correction phase and we have made it to the rally attempt. आज ही हम लोगों ने उसको rally attempt में किया है because it has not breached the recent low, the recent low from the day one of the rally attempt. So we have actually इसको हम लोग ने rally attempt में किया. But overall the index is actually trading with negative bias, and it has also breached its all key moving support level as well, whether it is 21 DMA, 50 DMA, 100 DMA, or it is 200 DMA. Every support level or every key moving averages is breached in this particular index. But if you look at आज का जो इसमें सेशन हुआ in Nifty FMCG, the index has actually reclaimed its 200 DMA. And yesterday also it has shown some kind of buying interest here. So from the past 2 days, there has been some positive hype, but it is too early to say whether the index will try to bounce back from here or not. So we need to wait and watch for this, especially for Nifty FMCG. And if the index is trying to reclaim its we can say like 50 DMA, which is on the top of this red line, then we might think positive about this particular index. Or as of now, we will try to avoid taking the stocks or any specific stocks or selective stock we can actually think of it. But overall index is actually trading in the negative bias as of now. So this is about Nifty FMCG. And now Nifty Energy. So Nifty Energy has also shown if you look at all the sectors, what we have discussed so far. So all the technical setup has actually deteriorated in the past 8 to 10 days only, or we can say from the past 2 weeks only. So here also the same case, after hitting the recent high, the index has actually started witness profit booking, and after that it has also breached its 20 DMA, and it has also breached its 50 DMA as well. But the thing is here, like Nifty Energy, it has reclaimed its this red line is 50 DMA. So Nifty Energy has actually reclaimed its 50 DMA. जो आज का जो ट्रेडिंग सेशन हुआ उसमें निफ्टी एनर्जी हैज रिक्लेम्ड इट्स 50 DMA. Now the point is whether the index is holding above or maintaining that level or not. That is the main concern about that. If that index is holding above that, then obviously we can expect that index might retest its recent high, which is placed around 40,000 of first it should go around just 1 second. Yeah, 39,156, which is actually 21 DMA, just 4% up from this level. So it has to reclaim that 21 DMA, and then obviously it has to retest that 40,750 or 40,800, if that 50 DMA is actually maintained and if it is holding above that. And so far as resistance is concerned for this particular index, then we can see like the recent low is actually placed around 36,850. The recent low, just I can say like on 15th of March, and after that the index has not touched that level after the 15th of March. So I am just considering that as a support level as of now, 36,850. If it is breaching that support, then obviously the index might retest its 100 DMA as well. And if you look at the 100 DMA, which is actually almost around 11% down, so obviously it will not go in one shot, or it will go gradually if that support is breached, and if there is some more negativity or some more selling pressure is weighing on this particular index. So this is about Nifty Energy. So I have completed my 4 sectors. I think 2 more sector is left.
Yes. So next is metal. So can you show the chart for metal?
Yeah, sure.
Okay. So if we talk about metal, so Nifty metal is trending in sideways only, and it has recently it took some support around 100 DMA and showing some bounce back. And today in today's stress session only it has retaken 50 DMA. And one other observation is that 50 DMA is our 21 DMA is very much close to each other. If I talk about momentum and everything, so momentum on weekly and monthly chart is positive, but the momentum has deteriorated on daily chart. So most probably it is in sideways and it will remain traded in sideways only. Range is approximately almost 8300 kind of level in upside, 83 or 8400 kind of level in upside, and approximately 7600 kind of level in downside. So, and current rate is around 8000, 8050. So almost 250 to 300 kind of upside maybe there in from current level. And likewise, almost 400 kind of downside range is also there. If I talk about my opinion, so my opinion is that it will remain traded in sideways only in that range. But this level of this 7500 or 7600 is a very strong support area. Suppose it will breach that area, then we can expect further downside towards 7000. But unless and until it will need not breach, so it will remain traded in sideways only. Further, after today's this bounce back, 50 DMA is a immediate support basis. I can say 50 DMA or maybe 7900 is a critical support area, which is almost 150 points from current level. Suppose it will breach that 7900. So maybe one thing is very clear that it may be ready to move toward at the 7600, 7500. But if and maybe below that also, but at least below 7900, I can say it will be ready to move towards 7600 to 7500. But suppose it will remain traded above 8000 kind of range, the way it is showing today, but that because it has already closed around 8050 kind of level. So maybe one can expect 8300 to 8400 kind of levels in upside. Otherwise, it is this index is also showing some sort of sideways kind of things. I am not expecting a major scenario change in coming weeks. But net to net, I can say because this metal index is not looking that much bad actually in current scenario. So maybe it will not give very much return, but maybe it will not deteriorate substantially also. And it may 2-3% or 4% here and there kind of situations may be there on both sides and maybe remain traded like that. One more thing that what I have seen that in this, if someone is considering this metal index, so it is not a matter of index only. I would suggest to focus on stock specific section. Few stocks belongs to this stocks are doing good, few stocks are not doing good. So if you're interested for buying buy this long position, so I would suggest to focus on stocks which are doing good out of this particular sector. Next is Nifty media. So media now, whole the charm has gone now in media, and there was a sharp uh, correction happened. It failed to earlier. We were expecting the day it will cross 2400, 2500 range. Maybe it was that was at that time it was showing kind of 33,000, 3,200 scenario, but it has never crossed that 2500 level. So I can say that our opinion, more or less, it has moved in our opinion only. Even though we have commented that, but at the same time, if you check our recordings and everything, so we have clearly mentioned that the day it will cross this range of 100 point, that is 24 to 2500, then only, otherwise not, otherwise remain traded in sideways. And that range is now there is a clear cut negativity. All the things are not going well, so obviously it is there is no positivity in this. But suppose now, but one thing is very clear here currently, that now stock is moving sorry, index is moving in strong support area, and in strong support area is placed in the range of 1700, 1700, 1750. So recently only today only, even it has in this week, actually last week as well as this week, it has retested 1770, and afterward it is showing some sort of bounce back. So this I can say a range of 1700, 1800 is a critical support area. So let's see whether it will give some bounce back from current level or not. Otherwise, overall sentiment and trend is negative in this particular sector. Yeah, so let's move to our query section. We will try to capture our maximum number of queries. So please open chat box for all, so people can start asking their queries, stock related queries, or anything query related to market.
Pawan, we have already 5, 6 government stocks list on the list
Yes,
from
yes, yes.
Arjun Wadia.
Okay, so let's start from that only. So one by one, just you suggest the name, then I will start commenting.
First one is BPCL.
First one is BPCL. So oil marketing company, be it BPCL or IOC or this Hindustan Petroleum. If I talk about all the three oil marketing company, so one thing is clear that upside scope is very limited now. Even recently, if I'm not wrong, recently only, I think last week only, before this Achar Sanhita, okay, government has slashed this petroleum product prices by I think 2 rupees, if I'm not wrong, and that is why I'm not expecting any kind of major move. And in my opinion, most probably next 3 months is this all these small marketing companies are going to face difficult time. If crude prices, and I think yesterday only crude prices are day before yesterday crude prices has elevated up to almost 5 month high level. So I'm not expecting any major thing belongs pertaining to this oil marketing companies, including BPCL. Most probably, it will remain traded in sideways only with more volatile kind of trading sessions in coming weeks, or at least in coming 2 to 3 months. Next,
Next one is HPCL. It's almost same.
almost same we have already commented.
HPCL.
HPCL I have already commented. I have commented all HPCL, BPCL, and IOC all.
Okay, and then on ONGC.
ONGC is almost similar kind of situation, sideways kind of thing. If someone is looking to buy, so I will definitely not suggest to buy at current level, including all three oil marketing companies, HPCL, BPCL, IOC, any stock, or even ONGC also. But if someone is holding and sitting on very much good gain, so at least I would suggest to book 50-60% profit at current level. Not if someone want to book full profit, then also it is fine. If someone wants to not want to book, so I would suggest to book at least 50% profit, upward profit at current level. And then suppose stock will correct 5-7% per point, then maybe that will give opportunity to generate some extra return. But it's up to holders mind and mindset, mentality and mindset, that what kind of investor they are. But at least in my opinion, ONGC, all marketing companies and everything is looking sideways kind of things from at least next 2 to 3 months perspective, or from 4 month perspective.
Next one is Tata Steel and NMDC.
Tata Steel. So when we were analyzing this metal, so metal is looking more or less sideways kind of thing, comparatively with positive bias. But that the way I have commented, that 7900 is a immediate support, and then followed by 7500. And this Tata Steel is also moving into similar manner the way this metal index is moving. Only good part is that after this recent correction or sideways in index, this Tata Steel is still in uncharted trajectory, even though some profit booking and some sharp profit booking has been happened in last weeks, but still there is a positive sentiment. So I would suggest to remain invested in this particular sector, in this particular stock, that is Tata Steel, with the stop loss around 140-139. Next.
Next one is NMDC.
NMDC is one other metal index, metal stock. Same kind of situation one can follow in this NMDC also. NMDC, there was a sharp breakout happened in the range of 115, 126 months back. And from the 115, 120, stock has doubled, I can say, or more than doubled. And now in this month, it is showing some lackluster trend. From the last 2-3 days, it is showing some positivity. But in my opinion, it may face resistance around 225. So if there is a bounce back happen, so I would suggest at least book partial profit in this also in the range of 220-225. For fresh buying, it is very difficult. If someone is really interested to take some extra kind of risk, then only one can buy. Otherwise, at least in my opinion, this is not a right time to take fresh investment, at least at current level. Let's wait for the very good base formation and then very good level for investment. So time being, I would not suggest fresh buying, but if someone is holding, so one can remain invested in this particular stock.
Next one is Coal India.
All the companies. So Coal India now this showing some lackluster trade from the almost last 4 5 weeks. And now this level of, if I talk about Coal India, the level of 430 is a very critical level to watch. 50 DMA is also placed in that only. And today it has reclaimed 50 DMA. Suppose it will not remain traded above 430, I can say. So maybe it will move toward almost at least 390. So 10% kind of fall, one can expect it to 10% kind of fall. So 430, that is current level, plus minus 5 rupees. Not 430 means it is not like 430. 430 plus minus 5 rupees is a critical, means one can consider 430, 425 to 435 is a critical level to watch. Suppose it will breach that 425, 430, then maybe it will be ready to move toward 290 or maybe 285 kind of levels. So just keep watching. Once again, I would not suggest to buy this stock, but if someone is holding, so keep your stop loss according to market direction, and one can trail stop loss.
Pawan, there is one general query that is, do you think today's rally in overall market is a bull trap?
It may
So
be.
what do you think?
It may be. I'm not denying for that. But as such, if I talk about points point of view, percentage market placement point of view, so as such, there is no much more negativity in the market. If I talk about Nifty 50 or Sensex point of view, but one thing is very clear: the market has already moved into volatile kind of things. Like I have commented that there are three segments we categorize actually: bull market, bear market, and pig market. And from the last 1 month, we are into at least in my opinion, we are into that pig segment kind of market. So I'm not denying bear trap, and maybe if things will further deteriorate, any negative things will happen. So one can expect up to 21,000 kind of level, or maybe 20,800 plus minus 200, 21,000 kind of levels in coming weeks. I'm not denying for that. Or maybe it will move toward 22,200, 22,300 also. It is very difficult to comment 203 about 200, 300 because it is because at least to me, this current phase of market is not looking smooth kind of rally. Anything can be happen. Morning you will see bullish trend. Evening you may face that it has saved off almost 200, 300 points from day's high. So possibilities are there. I'm not denying it. That is why I'm saying it is very difficult for all of us to generate positive return in such kind of market. Okay.
So shall I take a few queries?
Yes, one more. Yes, one more thing. Yes, Pradeep is saying yes. We only see MTM profit by EOD. All profits are there. That's what I'm saying, ना. कि ऐसा भी होता है कि सुबह में पॉजिटिव होगा, शाम को निगेटिव होगा, शाम को निगेटिव होगा, दूसरे दिन फिर से निगेटिव होगा, शाम को पॉजिटिव हो जाए, तो एनीथिंग कैन बी हैपन. ये मार्केट ही अभी ऐसा नहीं है कि स्मूथ मार्केट चले, और मुझे लगता है अभी 2 3 महीना 4 महीना पिछले 1 1.5 महीने से चल रहा है. एंड टू बी प्रिसाइज, इफ आई इन माय ओपिनियन, दिस फेज हैज ऑलरेडी स्टार्टेड, आई थिंक मिड ऑफ December. So we have already passed 3 months, and it is going to be there for at least for another three months, maybe at least. So we can't do anything. We have to face it actually. That is the only way to remain invested in market or remain traded in market.
We
Yes,
have to
yes,
follow risk management in this.
yes. In such case, following the efficient risk management is become very much very important actually. If someone will follow efficient risk management, so then obviously we all have seen lot of phases of market, so we will pass this phase of market also. So risk management is a key to remain invest. Risk management is a key factor to remain sustainable in this particular market. You are advised to keep the position size small. Of course, that is one way to manage your risk. Yes, right. Yatisha, please take few queries.
Okay. So let me share my screen.
Yeah, please do that, Yatisha.
Okay. So first query I'll be taking is about India. Okay, so if you see here, already the stock is trading near its moving average, and it's been consolidating over here. And after if you see here, there is a strong buy signal generated here, and there is a retest of breakout, and there is a good run. And after that, it is consolidating here right now. So at current juncture, fresh buy can be avoided in this volatile market. So only in case if it breaks out about this, either it has to advanced buyer can take a fresh entry once it breaks out this previous swing high, and next resistance will be around this level, the on the higher side. So overall, the volatility will continue to in this market. So follow your risk management, and for right now it's holding its 50 DMA. So if it holding above 50 DMA, it's well and fine. So those who are bought much earlier can take few 50% of profit in this particular stock, and hold this with the stop loss of either swing low or 50 DMA. Rahi, can you tell next stock?
Yeah, Yatisha, please 1 second. You take
HCL.
GMM Fraudler.
Okay, GMM
Okay, you can
folder.
take it from the top also. Because from the last, I am actually making the screen for myself.
Okay, so HL, which was outperformed among all the PSU sectors, so it has outperformed from the last 2 3 months. So right now, if you see here, if you draw a trend line from connecting the lows of December and the recent low, it has been yesterday it has been breached that trend line. However, today it has bounced back sharply. So let us see whether it is a just bounce back for 1 day, or that trend will continue to this trend will continue. Those who are bought much earlier and still continue to hold can continue to hold this stock, but at the current juncture, fresh buy can be avoided. So once the stock has been takeouts this level, that is around 31,000, this swing high, that is when the fall has been started. So that is around 3200, 33 kind of level. Once it crosses that buy range, one can initiate a fresh position. But unless or until, it's better to wait where it is still this consolidation phase is not yet over. So let's see how it goes in the upcoming days. And one can keep it in the watch list for the level of 3,200, 300 kind of level. Next one
Okay,
is
Yatisha, I am taking Yatisha.
okay.
Some of the stocks, okay. So I am starting with Zomato. So overall, sentiment for this particular stock is good. There is no weakness so far. Actually, there was weakness at this point of time from March 4th to, we can say, like March 13, 1 week of consolidation phase was there, and then stock got support around its 50 DMA, and there has been a bounce back also, and the stock actually reclaimed its 21 DMA as well here. So overall, the stock is trading in the bullish zone actually, and from the pivot level, it has gained around 34%. So I think there is no weakness so far in this particular stock. The next one is Rupa. So Rupa, by looking at the chart itself, there has been a profit booking, and stock is actually trading in the consolidation phase. So at this point of time, I would not like to suggest to buy this particular stock. The next one is Dreamfall. The default is also trading with negative bias, and it has been continuously forming lower low and lower high price structure on the daily chart if you look at this particular price actions. So I would not suggest to buy this particular stock as well. The next one is Sham Metallic. So Sham Metallic has actually, after having the fall from this high, the recent high that has been placed around 738, we can say, and then stock has witnessed some profit booking. In this process, it has also breached S21 DMA, 50 DMA, and 100 DMA as well. But after breaching its 100 DMA, the very next day, the stock has actually witnessed some buying interest, and this buying interest continued for, we can say, from the past 1 week, and it has also reclaimed 100 DMA as well. But still there is it is not looking that strong, and I would not like to I would not say to buy this particular stock at this point of time, unless and until it is at least reaching at this particular stage where we can say 688 it is showing, so I will take 690 range. So from there we can think of at least positioning some of the money into this. But overall, if you look at the fundamental part, it is actually great, but technical it is not supporting as much. So now the Inox India. So Inox India is also in the correction phase, we can say, and in a very short and simple way, at this point of time, I will not suggest you to buy this particular stock, especially one which is technically deteriorated or where there is like profit booking happening. The stock is under selling pressure. We will not suggest you to buy that particular stock. The next one is GM Fodler. The stock is, we can looking at the chart itself, we can say like it is actually trading with negative bias, and it is actually we don't know when there will be formation of the bottom take place. So those who think to buy here, they would be thinking that okay, ये तो यहाँ का low बन गया, but see after that also there it is actually continuously falling. So I would suggest don't try to catch the falling knife and try to avoid those stock which is actually falling. The next one is YouTube question, Necto Pharma. So the Necto Pharma also like from the past 2 to 3 weeks, I think 1 month I can say from 1 month from the 19th of the Feb actually the stock actually falling after hitting the recent high at 1108. There has been profit booking and still it is in that consolidation phase only. So I would also not suggest to buy this stock as well. Okay, Yatisha. Yeah, please take
Yes,
some.
yes. Yeah, sure. Thank you. Thank you, Ravi.
Yeah.
Let me share my screen. Okay, so first one I'll be taking is NCC. So here also stock has after this volatile session from last 2-3 weeks. If you see here, there is a very high volatile stock. It is happened here, and right now if you see here, it is still trading that near crucial resistance level of 240 kind of level. So today it has very good. It has bounced from 50 DMA, but and on the upside there is a 21 DMA also. On the price action support and resistance levels is 240 is a key resistance level, and the downside support is it's around this price range of cluster of 210 kind of level. So here fresh entry can be avoided. So once it crosses this previous high level, only once it crosses 240, sorry, 263, 264 is a very good buy. But right now we might see some higher volatility in this, especially in the PSU stocks. So please trade even if you're considering as this as a buy point from 50 DMA. Please keep your stop loss below the swing low or 50 DMA as a stop loss, or else you can better to wait for the previous swing high. Next one is MRPL. So here also majority of the stocks in this broader market it has bounced from its 50 DMA from last 1 week. So here also it is facing support around its 50 DMA and facing resistance around its 21 DMA. So first it has to cross and hold above this price cluster range. So once again it might trade in this consolidation range for some days, and likely to make us other base over here. And right now fresh entry can be avoided even if you're considering a fresh entry at this current juncture. Stop loss will be a bit below this price cluster range, so that will be very deep, so one can avoid this stock right now. And VEDL. So VEDL last year this stock has been clearly underperforming, and there is a lot of negative news were coming in flows. And right now it's if you see in the long-term chart that the stock is making a bottom around 210 and trading this in this range around 330 kind of range. So right now it's consolidating in this particular range, and And overall, the moving average, if you see here, it's almost slant, and there is no much of on the higher side. So one can look for one can keep it on the watch list if it any positive signs in coming up in the next future days. So one can look for the price range of 290, 300 above. Anything above that will be a very good ideal buy point. But right now it's consolidating. One can keep it in a watch list and continue to track. Next one is BBL, Varun Beverages. So this is a outperforming stock, and all the mutual fund holdings are holding since since its IPO. So it's been in the upward range, and it's been trending in the positive range as well. And from last 1 month, it's trading in this tight range of 50 DMA. And if you see here, there is a flat base breakout also. But if you see the pattern, it's almost 6. So what one can do is better to wait and watch for this stock, whether it likely to continue to this sideways trend. And one can keep a close watch list once it closes above this 1450 kind of level, 1450 kind of level. So once it breaks out above this price cluster range, so next level of resistance will be around 1500 kind of level. And on the downside, if it falls below this 50 DMA, and if you see here, historically 50 DMA acting as a strong support level. So if it falls below its 50 DMA, so next level of support will be around 1200 and 1200 level. So that is around 100 DMA also, which is placed around that level. So there will be a quick sharp selling which may happen in this particular stock. So one can keep it in a watch list right now. Next one is Zensar Tech and M&M. So Zensar Tech, it's forming a base over here on the consolidation range. It's from last, if you see from last September, where all the stocks were outperforming this on this, especially this stock has been underperforming and making a base. So right now, if you see watch closely, inside the base there is an advanced buy setup which can be seen. So if you draw a trend line connecting the highs of this and touching this point, so it has given a buy signal over here, and the volume also which is came much higher. So which can be and on the downside risk is around this base, so that is around 500 level. So one can go with the 10%, 12% of stop loss and ride this trend. And the upside momentum is very limited, where if you see the overall chart on the weekly chart, so it's almost outperformed in the last 2023. So right now it is making a base. So if it breaks out above this level, so then will be a very good bull run for the Zensar Tech. So right now it has given a very good buy signal over here with the stop loss much below its 10%. So that is only one risk at current juncture, whether it will go or not. So but overall trend is positive in this particular stock. Next one is M&M. So this stock has been consolidated a bit in the last 1 or 2 weeks. So there is a profit booking which is happening in this particular stock after the strong breakout from cup with handle pattern. So right now it hasn't tested that 50 DMA, but there is a strong bounce back from the last Monday, and there is a upside reversal is happening right now. So what we can see is there is a strong resistance around its 21 DMA and 1890 level. So where the sharp fall has been started in the last 2 weeks. So that is a level is a crucial for M&M, and once it breaks out that level, so it might test previous all-time high, and this uptrend will continue after that. But right now, one can keep it in the watch list with the if it comes below this pivot range, then very good. If it comes back below 50 DMA, then it's a very good bounce back. then can be initiate the position. But right now, one can avoid this stock for the immediate at current juncture. Rahi, can you take few queries?
Yatisha, yeah, I'm taking it.
Thank you.
So I would like to start from CG Power. The stock is already it got broke out. आज ही इसका breakout हो गया. So the stock is looking positive actually, and if you look at the volume also, it is above average volume from past 2 weeks. The stock has witnessed buying interest as well. So overall sentiment is actually great. Even the bad demand is A plus. So overall the stock technical part is looking good. So there is no weakness so far in this particular index. If you are holding this stock, you can remain invested in this. The next one is Mahindra Logistic. So Mahindra Logistic is actually trying to form consolidation. It is actually in the consolidation phase, or actually it is trying to make the handler formation, we can say. So once the stock is taking the breakout, the pivot is placed around 447.9. So we can consider it as 448 or 450. And once the breakout is taking place, then you can take your call. All cargo. All cargo logistic is actually showing technical deterioration. The stock is falling. It has breached its all key support level as well, whether it is 21, 50, 100, 200, all DMAs it has breached. And we don't know when there will be the formation of base here. So as I have already told, don't try to buy those stocks which is actually under selling pressure, or which is actually falling, or there is actually sharp fall in this particular stock. So don't try to buy those stock. The next one is Railtel. Railtel also, like from 28th Feb till I can say like 13th March, there has been a strong selling pressure in this. But the nice part in this is the stock has actually tried to show some buying interest. It has reclaimed 100 DMA also, and now as of now it is trading near that 100 DMA zone or 100 DMA range. But the thing is whether the stock is holding above that or not, or whether that 100 EMA is being maintained or it is accelerating above that or not. That is actually the point. So you need to take the watch list for these stocks, and once it is trying to reclaim its 21 DMA, because it is 21 DMA, if you look at that, it's also like 9%, 9 to 10% away from this level as of now. So that might act as a resistance as well. So you have to take all those things and then you can take your call. But as of now, at this place, I would not suggest you to buy. Now the next one is National Aluminium. The National Aluminium also, it was actually trading under some selling pressure from especially like 4th March till we can say like 15th March, so almost 2 weeks. But actually here it is trying to form a flat base pattern here. So if the base formation is taking place and the stock is actually trying to move ahead means like 50 DMA and 21 DMA is being reclaimed here, then obviously you can take your call in this as well. Someone was asking about AC Action Construction. So Action Construction is actually good. There has been technical fall overall. When the market was negative, the stock has also fallen. But when the earnings came in this particular for this particular stock, the stock has actually shown resilience and it has moved higher as well. Okay, but overall market sentiment and there is some technical deterioration also, but that has not lasted so long, and stock has again bounced back from its 50 DMA. And overall sentiment as of now, I am saying it is actually positive. There is no weakness so far. So if someone is holding their stock, they can still remain invested in that. And if someone is trying to buy this stock, they can buy also, but we have to manage a proper stop loss. The next one is Yatisha. Rico Auto. So Rico Auto is actually trading in the bullish trend, and after having a breakout, the stock has also gained around 34%, and that also in just 13 days. So it is actually entered in the bullish zone, and it looks extended as well. But if you look at the chart, then it is looking bullish, and there is no weakness so far.
Next one is eMudra. Have you taken that?
eMudra, so eMudra, the stock is actually trending in the bullish trend after having this long, not, I would not say long, but almost 2 to 3 weeks of consolidation base formation here. From here till here, the stock has actually out of that consolidation zone, and again it has bounced back sharply, and it has also witnessed buying interest with above average volume, so that is also good. So overall sentiment is good. APS rank, if you look the buyer demand rating, everything is looking good. So if you are holding the stock, then you can remain invested in this particular stock. Next one.
Next one is Graphite India
Graphite.
in Maharashtra Bank.
Okay. Graphite India is trading with a sideways move, we can say, because there is no great bullish momentum here, and actually it is trading in the sideways, or we can say like short-term consolidation as well. So once it is being out from this zone actually, and then maybe 660 level would be the like ideal point to enter in this particular stock. But if you're holding the stock, then there is no such weakness as so far. So if you are actually holding the stock, then you can remain invested. But if you're thinking to buy, then I think you need to wait, and at least the stock should go around 650, 655. Then we can think of buying this particular stock. And then Mahabank. Maharashtra Bank, na?
Yes.
Okay, the stock has actually actually trading with sideways, or we can say a consolidation move has already occurred here. The stock has also breached its 21 DMA, and it has also breached 50 DMA as well. But there has been some bounce back, but it is still trading in the resistance area. So once resistance is over, like it is reclaiming above its like 65, 66 range, then you might enter in this particular stock.
It's
Yetish,
almost five. It's almost 5:40. So let us take a few.
okay, few
Quickly, we'll take
GMDC
a
I'm
few.
taking then. GMDC.
Okay.
GMDC. Okay, GMDC is also looking weak as of now, but the fall was actually very sharp if you look at the fall. And but the nice part is like there was support of its 200 DMA here, especially on 13th of March. It has not breached, it has hold above that, and then we have seen buying interest that has occurred here. So, but taking fresh call at this, it is actually I would not suggest once the stock is trying to move ahead of this like resistance part, like all these three lines, which may act as a resistance. So once that resistance is surpassed, then you can take your call in this sale,
Um,
SAIL. I'm taking sale.
okay.
Sale is already done or what?
No, no.
I think no one has taken sale so far. Okay. Okay, so sale is also trading with volatile manner. We can say like there is a rise and then fall is happening again. There is rise and fall. So uh, again, it is trying to rise, but the stock is looking quite volatile. And but we can say like it is trading with all key moving average. That is the only nice thing that I can look here. And but overall this multiple resistance and the fall that has happened after hitting the 145, that was actually very drastic. So I think you need to manage your risk management, and based on that you can take this call.
Okay, let us take last three queries.
Okay. Hind
Uh,
copper. Hind copper. Hind copper is here. So Hind copper actually it is trading with consolidation base, and it is still not out of that consolidation zone. So once the stock is breaking out from that consolidation zone, then you can take your call. So first I think here also there was consolidation base pattern, and after that the stock has gained around 10% to the pivot level. No, I think it is just 10% to the pivot level. So once the stock needs to break out, once it will gain 10% from here, right? So I think you need to wait and watch for the breakout, because right now the market condition and overall sentiment, as Pawan has actually mentioned in the beginning of this webinar, is actually very tricky, choppy, and we don't know, like in the morning it will be in positive, and in the evening it will end in the red. So this is that type of market. So taking fresh call, and especially which is riskier one, and the one which is in the consolidation phase, and which has not taken the breakout as well. So that will be not the advisable from my side. Next one, Yatisha.
Last DMART.
Okay. So DMART will be last then, right?
Yeah.
Okay, so DMart is actually looking great. Actually, we were thinking to add it also in our portfolio, but because of certain stop loss issue, and it was not falling in our ambit, so we have actually avoided it. We'll think when we'll enter again, if we will having the chance of adding it. But as of now, the stock is looking good, and it has also broke out, and the volume also is like above average volume. So there is no weakness so far in the DMart. And if someone is looking to buy the stock, then they can go ahead and they can buy it. But try to manage your stop loss. Don't go so deeper in this market. So this is all from our side. I think, Itisha, we need to end up the session, right?
Yes, we can.
Okay. So thank you all for your patient hearing. Thank you so much, guys, for the listening the webinar, and thanks a lot.
Thank you, everyone. So if you have missed any queries, and you can write it to us, and we'll try to answer it in via Telegram or email. Please write it to us if you have missed any queries. Thank you.
Thanks a lot.